Celebrities and finance influencers keep telling you to earn passive income, find tax loopholes, and cut your spending. But that advice is actually making your situation worse, not better. Having millions of followers doesn't necessarily mean that they know how to build wealth, and the strategies that made them richer could actively work against you. I passed the CFP exam at 16, and in this video, I'm going through their most popular advice line by line to show you exactly where it falls apart.
Stop buying coffee for $5.50. You go to work, you spend 15 bucks on a sandwich. What are you, an idiot? It costs you 99 cents to make a sandwich at home and bring it with you. You start to add that up every day, it's a ton of money. Most people, particularly working in metropolitan cities that are just starting out on their job, making their first $60,000, piss away about $15,000 a year on stupid stuff. And that's what they should stop doing.
I understand where he's coming from, since many people spend money on things that they don't actually enjoy just out of habit. But if buying coffee or lunch is something that you really enjoy, then it's okay to spend on it. Just make sure that you're on track in other areas, like paying off your debt and investing. And if you're trying to reduce your expenses, then focusing on the big three, which would be housing, food, and transportation, is generally a lot more effective than just looking at individual smaller expenses like he's talking about. And if you think this advice is out of touch, just wait until we look at Mark Cuban later in this video.
Dude, I'm spending like 400 grand last year just to live in LA on state tax.
I've heard there's a way around it.
Tell me.
I learned about this after I already left California, but to my understanding, there is a way to run it through the business. You pay it through the business, and that way it's deductible on that level before you take a salary.
I'm gonna have to look this up.
I think it's a gray area as far as I'm concerned.
I don't know if I should probably do it then.
Unfortunately, the more I get into like taxes, the more I realize that the whole tax system is a gray area.
Very gray.
It is insane. And everything is open to interpretation. And it's like, how well could you argue your case? It's like whoever has more money could learn these gray areas and hire the right people to do it correctly in such a way that's like compliant. It's insane.
It's true that businesses can deduct their expenses, but while I was studying for the CFP exam, one of the first things I learned about the tax system is that corporations need an actual business purpose beyond just reducing your tax bill, and using one to pay your living expenses like he was talking about is just illegal, and it could even land you in prison. Plus, it's true that being rich allows you to hire experts and really push the tax code to its limits, but that doesn't mean you can just do whatever you want, because if you go too far, you could still get into trouble for tax fraud. By the way, if this video is helping you, please like and subscribe.
What's the best side hustle for a student to get rich?
Well, here are 3 great side hustles you can start today as a student. First is faceless short-form content. This is Daniel Bitten, who makes over $500,000 a month posting viral content. Second is reselling luxury items. This is Ben Gallagher, who makes over $300,000 a month reselling luxury items to the masses. Third is online coaching. This is Jack Jefferson, who makes over $10,000 a month helping people with their gym gains.
These side hustles might work, but the problem here isn't the ideas themselves. Showcasing the astronomically high earnings of some of the most successful people as a benchmark is irresponsible, and it's just setting people up for disappointment. For every person who makes $100,000, there are hundreds more who fail. There are many good side hustles that might not make you a millionaire, but they're a lot more consistent. Some examples include managing social media for local businesses, optimizing websites, and creating YouTube thumbnails.
So if I was a 16-year-old kid and I needed to start a side hustle to make some money, there's a couple things that I would do. One, I would be all in on large language models like ChatGPT and Gemini, Meta, and the like, and learning how to prompt and going to my friends and teaching them how to do prompts for all their papers. And then I would go to businesses, because businesses, particularly small to medium-sized businesses, don't understand AI yet. And it doesn't matter if I'm 16, I'd be teaching them as well.
Well, that's easy for Mark to say, but this requires a lot more effort than he makes it seem, because you need to show businesses why they need AI and also why you're an expert who they can trust. If you are able to convince them, then it could be quite profitable, but it's a lot more work than solving some problem that they're already facing. But I have a bigger concern about Mark encouraging you to teach your friends to cheat on papers.
If you want to make at least $1,000 of passive income a month from the stock market, then these are the 3 strategies that I personally use. And these are the same exact strategies that I used to grow my accounts over the last several years. 3. And this is my favorite, I sell covered calls to generate income. This is how much money I got from selling covered calls on Amazon, Nvidia, and Google over the last month.
The sales pitch for covered calls is great. Earn some income for just owning your portfolio without any real risk of losing money since you own the underlying asset. But here's how covered calls actually work. You sell someone the right to buy the stock from you at a set price, which is called the strike price, until a certain date. If the stock doesn't hit that price, then you keep the premium, which is your profit. But here's the problem. If the stock goes up beyond the call strike price, the owner would exercise the call, which means they buy the stock from you for less than its market price. This means you lose out on all of the appreciation. Here's just how harmful this is. Research shows that missing just the 10 best days during a 30-year window would cut your returns in half. And if you sell covered calls, you would definitely miss those days. Plus, the high taxes and transaction costs mean that for most retail investors like you and me, it's better to just buy and hold stocks over the long term. But even people who hold stocks over the long term are making a few mistakes that are easy to avoid. Watch this video to avoid the 4 most common beginner investing mistakes that cost investors tens of thousands over the long run.